Silver is about to explode, at least that's what the numbers are telling us. But what if everything you've been hearing is a lie? Headlines are shouting that silver is collapsing, the bull market is over, and demand is faltering. But here's the twist. As I'm recording this, a $7 billion sell order is quietly being executed right now. And it's not from panic-stricken retail investors or a hedge fund losing faith in precious metals. It's coming from something much bigger, something most people don't even know exists. Why should you care? Because the real story behind silver's price movement, despite all those sell orders, remains hidden in plain sight. If you don't understand what's really going on, you could miss a massive opportunity. Stay tuned, because by the end of this, you'll know exactly why January 15th is the day that could change everything. Right now, most of the world thinks silver is on the verge of collapse. But what if I told you that this entire sell-off is not about fundamentals? It's not about demand, and it's definitely not about the precious metals market falling apart. Instead, it's about something much more mechanical, something that's been set in motion by massive financial institutions and hidden behind a wave of forced selling. So, what's really happening? January 15th is the deadline. That's when the biggest players in the market, index funds, passive investment vehicles, are legally forced to sell off billions of dollars worth of silver. They don't get a choice in the matter. It's written into their rules. And guess what? When $7 billion in silver needs to hit the market within 5 days, it's not about the metal's true value anymore. It's about a mechanical process pushing prices down. But here's the kicker. Silver is still outperforming gold by a factor of 5 right now. How does that happen? What's going on beneath the surface? Stick around, because by the end of this, you'll see exactly why the price action you're seeing today is all a setup and what to look for when the dust settles. Here's the claim. What's happening with silver right now isn't a crash. It's a mechanical shock to the system, and the data doesn't lie. Let's break it down. The Bloomberg Commodity Index is rebalancing, and it's slashing silver's weight from 9.6% down to 3.94%. That's more than a 50% cut in silver's market share in the index, and every fund that tracks this index, passive funds, ETFs, you name it, has to sell, no matter the price, no matter the fundamentals. Think about that for a second. $7 billion worth of silver sold at any cost with no discretion, no timing strategy. The market is being flooded with sell orders that don't reflect reality. And here's what's crazy. Despite this massive sell-off, silver is still climbing today. It's up 4.21% as I speak. That's more than gold. In fact, silver is outperforming gold by 5 times today. Notice what's missing: the retail panic you'd expect from a collapse. People are reading the headlines, seeing the selling pressure, and assuming silver is doomed. But they're missing the crucial part of the story. Physical buyers are stepping in and absorbing the blow. They're scooping up silver while the paper market crashes. This is where the story flips. The price you're seeing, it's not real. It's being pushed down by a forced selling event, and it's all going to reset after January 15th. Now, let's talk about how this situation escalates. The forced selling from index rebalancing isn't just some isolated event. It's part of a much larger pattern. In fact, we've seen similar events before in other markets. In 2023, a massive rebalancing in the energy sector led to a sharp crash in natural gas prices, only for the market to snap back with a 32% rebound in just a few days. And when that correction happened, retail investors who panicked and sold at the bottom missed the recovery. Here's what's crucial to understand. This rebalancing event isn't temporary. It's setting the stage for a major shift in silver prices. The big players are moving in and out of the market with no concern for supply or demand. They're just following the rules. But that's creating an environment where prices are being pushed down artificially. And here's the real kicker. This isn't the first time something like this has happened. We're seeing the same pattern repeat itself. When these massive forced sales end, there's always a bounce. The market makers, who've been waiting on the sidelines, will swoop back in and start driving the price up. Now watch how fast this escalates, because once that $7 billion in forced selling is finished, the market is going to find its true value. And that's where the opportunity lies. Let me hit you with something even stronger: the numbers. As the rebalancing continues, it's not just silver getting crushed. Gold's position is staying steady. Gold's weight in the Bloomberg Commodity Index is stable, while silver's is being hacked in half. This isn't about silver losing its value. It's about a mechanical process distorting the market. But here's the contradiction. Silver is up more than 4% today, while billions in forced sell orders are hitting the market. That's insane. The narrative you're being fed, that's the market reacting to weak demand. The reality is that the price action you're seeing isn't about silver's fundamentals. It's about index funds being forced to sell at any price. Notice what's missing here? Nobody is talking about the physical market. Silver may be struggling in the paper markets, but physical buyers are gobbling up the metal. And when this forced selling stops, the market is going to snap back. We've seen it before. And when it happens, people who sold out of fear will regret it. This is the part where everything changes. The forced selling ends, and that's when the true price of silver will emerge. But it's not just about the end of forced selling. It's about the moment when the market flips back to fundamentals. And when that happens, the price of silver will be completely different. Now let's stack this up. First, we've got the $7 billion in forced selling hitting the market like a tidal wave. Second, silver is still outperforming gold, even with billions of dollars being dumped. Third, we're looking at a deadline. January 15th is the cutoff, the day the forced selling must stop. All of this is happening in a compressed time frame, and that means the pressure is building. But here's where it gets even crazier. As the sell orders flood in, market makers, the ones who typically smooth out price swings, pull their bids. Why? They know when the selling is going to stop. They're waiting for the deadline to hit, and then they'll step in and buy up the cheap silver that's been dumped. This creates a huge liquidity vacuum, a hole in the market where the price is artificially low. And when that vacuum fills, silver could snap back with insane force. Now, here's the big question. What happens if this continues? What happens if the forced selling doesn't stop? We're at the edge of a tipping point. The next few days are crucial because they will set the stage for either a massive price recovery or a prolonged slump. But one thing is for sure, once January 15th passes, the pressure will lift and silver will find its true value. So let's bring this back to you, the everyday investor. If you're watching this, you're probably wondering how this forced selling is going to affect you. Here's the thing. This isn't just about big hedge funds or index funds dumping silver. It's about the physical market and what happens when you're holding real silver. Because while paper prices are being manipulated, the physical market is showing something entirely different. Take a step back for a moment. Look around. When was the last time you saw silver on the shelves at bargain prices? Physical silver is tight. Dealers are struggling to keep it in stock, and premiums on products like Silver Eagles are high. This means that real demand is still strong, even as paper markets crash. It's the perfect storm for anyone who understands how these things work. If this feels familiar, if you've seen these kinds of dislocations before, drop a comment below. Because if you've been here long enough, you know that this is when big moves happen. And this is the moment when the opportunity will either pass you by or you'll be ready to act. Let's dig deeper. This isn't just about silver's price. It's about the system that makes these crashes possible in the first place. You've seen the forced selling. You've seen the way the market makers are waiting for the deadline. But what's actually enabling all of this? The answer lies in the structure of the financial system itself. There's a huge leverage mechanism at play here. When massive institutions, like the ones tracking the Bloomberg Commodity Index, are legally bound to buy and sell assets based on rebalancing rules, they're essentially playing a game with one hand tied behind their backs. These funds don't have discretion. They have to follow the rules, even if it means dumping silver at rock bottom prices. It's not about what's good for the market. It's about what's legally required. And that's the unsettling part. The rules are set up in such a way that the market can be pushed to extremes. Prices can diverge from reality, and there's nothing anyone can do about it until the rebalancing stops. But once that happens, the system resets. The natural supply-demand balance takes over again, and silver's price will realign with its true value. This is why it's so important to understand the system, not just the headlines. The real story is the way these mechanical events distort the market, and that's where the opportunities are hiding. So what happens next? We're looking at two potential paths from here, and both of them are dramatic. On one hand, if silver's price holds steady or dips further in the short term, then the natural buyers, the ones who've been patiently waiting on the sidelines, will step in. The physical market, already absorbing the sell-off, will continue to tighten. And once that $7 billion in forced selling is over, silver's price could snap back faster than anyone expects. But here's the alternative. If there's more selling pressure than anticipated, if the forced selling extends beyond the initial $7 billion, or if the physical market isn't as tight as we think, then silver could see even more downward pressure. That would push the recovery further out. But here's the kicker. No matter what happens in the short term, the fundamentals behind silver haven't changed. The industrial demand, the inflationary pressures, and the role of silver as a store of value are all still strong. And that's where the real uncertainty lies. We're standing at the edge of a critical point. The next few days will determine the future trajectory of silver, whether it continues to get crushed by forced selling or whether it reasserts itself and starts a powerful rebound. Either way, this moment is setting the stage for something big. Here's the bottom line. January 15th is the line in the sand. Once that deadline hits, the forced selling ends, the rebalancing stops, and the market will find its true price. This is a unique opportunity, one that only comes around when market mechanics distort reality. The price you're seeing today is not silver's true value. It's a temporary dislocation created by $7 billion in forced sales. After January 15th, everything changes. The question is, will you be ready when the market snaps back? This is a moment for patient, disciplined investors. The crowd is panicking, buying into the headlines, selling into fear. But the data is telling a completely different story. If you want to stay ahead, if you want to take advantage of this rare window, you need to keep your eyes on the key indicators. The gold to silver ratio, the open interest, the spot premiums. Watch January 15th closely, because once that date passes, the game is up. The next move could be huge. If you found this analysis valuable, don't forget to hit that follow button. I'll be back with more updates on this unfolding story, helping you navigate the next phase of the market. Stay smart, stay patient, and I'll see you in the next video.